You've got, you like C Group, you've got a buy on a price target 90. Talk us through why, and also what about Toko? Excuse me, what about GoTo, excuse me?
Yeah, great, Martin. So essentially, I think what we saw yesterday, the 28% plunge in C Limited, I think market is paying attention to the e-commerce competition, intense e-commerce competition, but kind of ignoring the stabilization of their gaming business and also the growth of their fintech business. I think, to me, that is the theme. Is there an issue, a concern in the e-commerce business? Yes, TikTok is there. Competition has intensified. Now, what has happened? The reaction has been different. GoTo's Tokopedia has said, okay, I want to focus on profitability. It's okay to lose some market share. We can see that their gross transaction value has declined 7% quarter on quarter for GoTo's Tokopedia. But for Shopee, they have managed to, in fact, sequentially grow a little bit of their GMV, and they are taking the position of defending their market share. What is the right strategy? Okay, what is the right strategy? Losing your market share and pursuing profitability, or gaining market share or defending your market share? We think at this stage, when e-commerce penetration is so low and it's a high growth market, actually defending your market share is the right strategy in e-commerce. You don't want to give a foot in the door to the new player. That's what we think she's doing, and they are not just shipping subsidies, they're also investing their own in-house logistics, because incrementally what we do, you keep on investing in your in-house logistics and pay less to the third-party logistic players. That's a way to go for e-commerce. And gaming, wow, gaming was completely surprising. It's the first time after so many quarters. Sorry, you want to? Yeah. Do you want me to continue on gaming, because that's a key surprise
here? Go ahead, Sachin. Please do. Please continue, sir.
Gaming. If you look at the gaming segment, after many quarters, we saw that their quarterly paying users actually rose on a sequential basis. Right? These are people who are actually paying more, and their EBITDA, actually adjusted EBITDA, also rose. So if you look at the complete picture, gaming is again proving the cash cow, which gives them enough firepower to go and pursue an aggressive e-commerce strategy. So we are not worried about the overall EBITDA because of gaming, and also fintech. Fintech actually had a 39% sequential growth, right, in adjusted EBITDA. Again, fintech, they are probably more capable than any other platform company in terms of lending in Southeast Asia.
Right, Sachin, very fair to point out that there was a significant recovery, at least in terms of EBITDA for both gaming and also the fintech business continue to grow. But I think the forward-looking statement from their CEO, Forrest Li, might have caught people a bit off guard. They did say that while they want to ramp up reinvestments, at least in e-commerce, to protect that market share you're talking about, it could actually result in possible losses for the group in subsequent quarters. I think the question, for the markets now is, can C Limited balance these two things, whereas they can protect or grow their market share, but also stay on this path to profitability they just got on in the fourth quarter of last year? Can they manage both, or is this now going to be a struggle that might be too big for them to meet?
Yeah, so I think, the way we have taken it that they can manage it. I mean, on its own, e-commerce profitability will not increase, it might decrease, that's fine. But overall group can manage it because of fintech and gaming. So if you are, let's say, a near-term investor and you focus on near-term cash flows, then yes, gaming and fintech are coming to a rescue. And if you're a long-term investor, then definitely defending in market share will pay you off in the long term for your e-commerce, right? That's the way we look at it.